Hello everyone, welcome to the daily markets video. So today we had a lot of learnings and a lot of things happening that I wanted to share with you. And this is going to be a very insightful video, so make sure to watch till the end. So without further ado, let's jump on right into the analysis and let me share my learnings, insights, and also my future outlook for the markets. So starting with the weekly time frame, let me show you the charts. So as you can see over here, this is the weekly charts. And as we have discussed since so many days, that this is the top of the range, that is 0.786 level, and this is the bottom of the range. And the beauty of today is we perfectly rejected from the top of the range. So if you can see over here, the top of the range, that is 786 level, is 15,423, and we rejected from here. So for us to go higher, it is very important to actually close above this range so that we can have the next resistance level on the top of the Bollinger Band. So this is the only update as far as weekly time frame is concerned. So let us jump on to the daily time frame to actually, discuss what happened today and, the important stuff. So looking at the daily time frame, I wanted to discuss one important thing. We are very close to testing 5-day moving average. So I posted a pre-market video last night stating that there are very high chances that if we break down today, then we are going to test the 5-day EMA, which is exactly what is happening right now. So even if we close above 5 EMA today, there are very high chances that tomorrow, that is Friday's session, we will be testing the 5-day EMA. So let me show you in the charts what I mean. So this is the daily charts if you see over here, and I stated that for any security to go higher, it needs to build above the previous day's high. So the previous day's high was around 415. So the 415 level got breached many times on intraday. But what happened is the moment two important things happened today. One is the bond auction of 30-year duration, and the other is the speech from the Federal Reserve Chairman Jerome Powell. So that is what literally broke the markets today. But on the daily time frame, my resistance sits at the top of the Bollinger Band, that is this one, and my actual support on immediate basis sits on the 5-day moving average. But what I think is the 5-day moving average support, I think, is going to be tested tomorrow, and there are very high chances that 5-day moving average won't be holded. So my bedrock support, the meaningful support, is sitting over here, that is on the anchored VWAP, that is the white line that you see. And the ultimate support, is sitting at 50-day moving average. So why am I saying this? The reason is we had a blastering rally since the last week of October, and in the November we are seeing there are very high chances that we will consolidate into this range. And the thing is, if we test the 50-day moving average, it would be very crucial for bulls to hold this level. If this level gets hold and we start building above this level again, then it would be a very nice Christmas rally. But for now, we finally broke this winning streak of almost 9 days in back-to-back session. So today was the first red day. So many of the bears are, thinking, okay, this is the top, we are all done now. It's not like that. Please look at the charts and just, the tape is the tape, and believe on the data only. So what does the data say? The data says that we are still above the 5-day moving average, we are still above the anchored VWAP, and most importantly, we are still above the 50-day moving average. So until and unless these important levels gets broken on the downside, do not do that mistake of being bearish, because for being bearish, we need to break down below these levels. We have not done yet, and we have not done it so far. There are very high chances that next week the release of CPI data numbers, that is consumer price inflation numbers, will be released. So if the consumer price inflation number if it comes on higher, more than 3.8 or let's say 4%, because remember 1 month ago the crude oil prices were very high, so that is going to reflect in the CPI numbers as well. So if it comes in higher, then that gives Federal Reserve the permission to raise 25 basis points again in the month of December. So if that happens, then the market is not going to like it, because now the interest rates will be higher for longer. So that narrative is not going to be positive for markets. So we will see and we will wait for the incoming data, and we will access the situation, and then we will decide. So this is the basic macro scenario of what is happening. So as long as right now we are still bullish, this is just one red day. Until and unless we destroy the support levels, we are still bullish. So we may consolidate in this range for, let's say, a week or two, and then move higher. So that is a very high possibility. So if I use my marker, so this this range will be consolidating for a few days, and then there is a very high chance that we move higher. So this is my thesis moving forward. And so let us go to the intraday time frame, because today I want to teach you a very important concept: why I do technical analysis, why I take care of macro things that are happening, and why I take care of the news. And I blend all these things together, I blend all the data together, and then I do trading. So my decisions of buy and sell are not just on the basis of technical charts. And I'll tell you why, because this is the perfect day to actually show you in live time why am I paying attention to the news and to the fundamentals also. So your main focus as a trader can be technical analysis and can be charts, but you also need to know certain macro things, certain news events, and how you can benefit from it. So let me show you the intraday charts for today, and let me show you what I did and what are the strategies and what are my observations. So if you look at the intraday charts, I want you to highlight on two things. One, there was a bond auction that was going to happen for the 30-year US bond treasuries. So the 30-year bond auction happens, and the investors do their bid for the 30-year notes. Now what happened is the 30-year auction, when it started, the 30-year bonds skyrocketed, and the rate was almost around 4.8%. So let me show you what I mean. So this is the intraday charts, right? And in the intraday charts, as you can see over here, the timing of Nasdaq when it crashed like crazy out of nowhere was 10 o'clock. And look at what happened at 10 o'clock. So at 10 o'clock, there was this 30-year bond auction. So if I go to the 30-year bond auction over here, you can see at 10 o'clock, that is this candle, it skyrocketed and it exactly stopped at 4.189. So 4.189 for a 30-year US Treasury, financial instrument is way more high. So the relation between the bond market and the stock market is, if the long duration bonds go up in the interest rates, if the yields go higher, then there is very less impetus for investors to take risk in the equity markets. So as you can see over here, the bond market's 30-year treasury went skyrocketed, and at the exact same time the Nasdaq, on the other hand, went really down. So if you go to the Nasdaq contract on the same time period, you can see that out of nowhere we had a very big red candle, and that too corresponds to 70 points. So this was the observation. So normally what happens is, whenever there is a news event related to the bond auction, let's say 10-year or 30-year, so normally what traders do is they try to neglect such news announcements. So this was the perfect day to show that you have to be very mindful and very alert on these kinds of actions, because the correlated assets or the other asset classes can have a significant impact on the instrument that you are trading. So this is what I wanted to highlight. And then after, you can see over here, after 11 o'clock, that is exactly this one. After 11 o'clock, the market straight away kept on falling down. And this was the result of Federal Reserve, the chairman. So Chairman Powell started speaking, and apparently markets are, considering his comments as hawkish. Markets are not liking it, and you can see in the price action that it felt. Now, the beauty of technical analysis is I last night I uploaded a video of pre-market analysis. That is my pre-market homework going into the today's session. I told very clearly that I am going to have a long entry at the S2 point of the pivot level. So this is S2, and you can see how amazingly it played out. So we are almost very near to touch S2. So this is why, and I explained the reason why I was not considering S1 as a probable support. So you can see over here S2 is holding very nicely. So please watch that pre-market video to know what homework that you need to do going into the trading session before the day. So these are all the different dynamics that I wanted to share. Again, going into today, I wanted to share my game plan. So today I thought that if we close, or if we build above the previous day's high, only then I will go long. So as you guys know, like, I wait for the first 30 to 45 minutes of the session, and then I start taking any positions. So if you see over here, 7 o'clock, that is my time, Pacific time, 7 o'clock, we had a big red candle. So we rejected on the top of the previous days for once. 7 o'clock, we again rejected. And look at what happened. So we also got the bearish crossover, that is 5-day crossed 26-day EMA from the top. So this is the bearish crossover. So what I did was I took a short trade near here after the close of this candle, and for as I normally do, I take my profit targets for 5 to 15 points. So after 5 points, I just do a trailing profit, so trailing order. So it really paid really well. So I was able to grab almost around 8 points for 5 contracts. So that is really nice. And then I just waited. So the thing is, since I get the bearish crossover, but since I was not building below the previous day's low, I was very skeptical of this downturn. And look what happened next. It kept on going, and it built, and it gave the bullish crossover over here. So I just waited, and then the R1 was breached. So I was of this opinion that, okay, we breached R1, but now we have Fed Chair Powell speaking in 2 hours. So let's not get get into the risk. So that is why I waited. And absolutely, look what happened at the bond auction at 10 o'clock. So the reason why I'm sharing all these thoughts is I want to share the thought process behind the decision making when a trader trades on an intraday basis. So this is the thought process. These are the data points that you need to keep in mind, and that is how you can navigate any of the trendless days very easily. So there's a lot to learn every day. So this is my take on intraday basis. Now look at the VIX, what happened with the VIX. So as you can see over here, from the start of the day till the bond auction, VIX was doing nothing. It was just hovering around the P0 level. So VIX was not giving a clear-cut indication. And after the bond auction, it went on a blastering up move. So we had the confirmation from the VIX that the markets are going to go down because the VIX is making higher highs and higher lows. So that was a very big confirmation from VIX that VIX was going higher. So the market is supposed to go lower. So there is an inverse correlation between the VIX and the Nasdaq contracts. Specifically, that is why we look at VXN and not the normal VIX, which corresponds to the S&P 500. So that's my take on the VIX. And as you know, so now all the speeches of the Federal Reserve Chairman is over. Now all eyes are on the real economy, and all eyes are on the data releases. So one of the most important data release for the next week, as again I said, CPI data release. So keep a close eye on inflation numbers, and keep a close eye on the bond yields, that is the rates at which the US government is issuing treasuries, because if that is higher, then the investors will move from the equity markets to the bond market, and that may cause a little bit of pain in the equity markets. But as far as the daily charts are concerned, please do not make any mistake in thinking that this is the top and now we are again going to go down. Always wait for these support level to get broken and only then become bearish. So always learn, keep learning and keep growing. So today I would like to conclude this session, and I hope you are learning a lot, and I hope you are enjoying your financial journey, whatever it may be, maybe investing, maybe swing trading or day trading like me. So let me know in the comments below, like what are your thoughts and what topics you would like me to cover, and I would be more than happy to do that in my free time. So until next time, thanks so much for viewing, and this is my profile. You can follow me on TradingView as well, and stay tuned and keep learning and keep trading.